All right, and here we go. So I'm about to make a video on some basic trading foundational pieces. We will go to a different chart, a chart that is empty. And what I'm going to do is I'm going to erase this whole chart, and then I'm going to walk you through some basics, right? I'm going to walk you through some basics. All right, just cleared all my drawings. Okay, cool. I will go to a higher time frame. I'll just do like a daily or something. Actually, I like the 1 hour better. Let's use the 1 hour time frame. Okay, cool. So let's start with what is a candlestick and how do you read a candlestick? So look, check this out. We're gonna go to Google. Diagram of a candlestick. Okay, cool. All right, let's hop right into it. All right, so as you can see here, and I'll screenshot this. Let me make sure I got it. Okay, so I don't have my Apple Pencil right now, so it's all good. I gotta find it. May have to order a whole new one. Is it not in there? Man, I hate when I use Apple Pencil, bro. It just never stays on here because it's a magnet, but it's not super strong. All right, I like this picture maybe a little better. Okay, cool. Right. So, all right, let's go through this. I'll screenshot, zoom in. Maybe y'all can actually download this image right here. Let's go back. Save the photos. Boom. Okay, cool. So this is a diagram of a candlestick, right? And so what's going on is screenshot this. This is, when they say real body, right? Let's see. What's going on? Why I can't draw? Oh, I'm using an eraser, that's why. Let's use blue. So when they say real body, they're referring to this is the body of the candle. This is where on a bullish, this is a bullish candle. So you're gonna say bullish. This is a bullish candle here, right? It's bullish because it opened here, right? It opened here at this level, that line, and then went up here and closed. Meaning it closed higher than it opened. That means price went up. Price went up, right? This means price went up, right? And so if we just want to walk through the actual movement of price through this candle, or this is what this candle is telling you. This candle is literally telling you how price moved. And it determines that by telling you the open, the high, or we'll do it like this. We'll open, low, high, and close, right? So that means this candle might have did something like this, potentially. It opened here, right? So it opened at this point. It might have went as low as here. It went as high as this point, but then it ended up closing at this level right here. It ended up closing at that level right there. So whatever that price will read over here, you know, 1,000 or 100, right? That was that price point. This might have been 50 down here, right? This might have been 50. And it's just letting you know where how price moved. And the reason it's bullish is because it closed higher. Bullish means price went up, right? Or you're or bullish it means that you're basically looking for price to increase, right? Okay. And then it's the same over here, right? So except in reverse, right? So price opened here, right? It went as high as this point, it went as low as this point, and then it ended up closing at this level right here, right? And that's bearish. This is a bearish, right? This is bearish. And so this means that price went down. This means that price went down according to this candle during that time frame. So each one of these candlesticks is representation of price over a certain amount of time, right? So if you're on a 5-minute time frame, that means this is how price moved within that 5-minute increment. If it's, on this side right here, right? So this price move, whatever amount of points, we said it moved up 50 points in 5 minutes, right? On this side, we had price going down 5 minutes. If it was an hour, it would have been an hour. It would depend on what time frame you're on. I'll get to the importance of time frames in a second, though. Watch. The other part you want to pay attention to are these wicks, right? You want to pay attention to these wicks. Let me get all this out the way. So you got the body, right? And then you have these wicks. These wicks are here, right? This wick is this little area beyond the body, right? The wick is important because it just lets you know how far price went. And then wicks can absolutely affect you, in your trading and things like that. Like you hear people talk about all the time getting wicked out, or if you haven't heard it, you'll hear people say they've been wicked out, or the wick, they had a wick rejection, you know what I'm saying? Which sometimes you in a lot of cases you'll learn that just because a candle closed bearish doesn't mean price is bearish. It could be an indication of it could be an indication or confluence of price still continuing bullish. It's just all about you're gonna grab more context around the candlestick so that or price movement with more candlesticks so it makes sense to you. In just this instance right here, we're just talking about, how do you read a candlestick and what is it telling you? Because you'll start to see that there is an entire language going on in the charts, and it's teaching you and telling you what a whole story of price for over a certain amount of time, right? So we got it. You got the real body. You got the wicks, right? This is the body, right? This is the body. You got the wicks high and at the highs and the lows, right, outside the body, and then you understand the open. So on a bullish candle is going to close higher than the open, showing that price at the end of that time frame, that time increment, price is higher than when it opened. That means it's bullish. If it opened higher and closed lower, that means that candle in that increment was bearish, right? All right, cool. So y'all got that. That is how you read a candlestick. Let's say that the photos. Okay, cool. Let's go back to chart. All right, now we're going to talk about price, right? We're going to talk about trends and understanding structure. So there are 3 ways the market moves, right? Where my favorites at? 3 ways the market moves. Market moves. Uptrend, downtrend, and then you have ranging or consolidation. Right? So those are 3 ways the market moves. An uptrend looks like this. this is what an uptrend looks like. Let's say you start from this low here, you have price one, you have a high that was made, you have first we started from a low, price went, made a high, it made a lower high, it made a higher high, it made a higher low, it made a higher high. This would be considered an even low, basically. For now, we're just gonna call it a higher low because it's higher than this last low here. Then price went on to make another high, higher low, higher high. So an uptrending structure is made of higher highs and higher lows, right? And I'll write that in for you. So we have these. So this would be we're gonna call it a higher low, right? Because it's higher than this last low. You have clone that. You have a higher high, right? Because it's higher, because this is a high from this point, right? It's actually higher than here, so you could call it we're not gonna worry about that. No, we want higher high. Okay, yeah, but we got a higher high. Then right here, well, I'm just gonna call this a high for now. We're just gonna say out of the high. Actually, it's okay. I'll call it a higher high. So we made a higher high, higher low. We made another higher high right here. We made a higher high right here, right? Then we made watch this. Clone that. From the laptop, it's a little easier to navigate this. From here, we made a higher low, right? So I think you're starting to get the pattern, right? Another higher high. Turn this off. Made a higher low. And then finally, another higher high. Cool. So y'all get it. So an uptrend is made of higher highs and higher lows. So what do you think the downtrend is going to be made of? I'll erase all of this. Actually, I'll tell you what, we'll keep that there. All right. So let's go through what a downtrend looks like. So let's say from here, you had this. We just came out of some consolidation here, as y'all can see. It wasn't really doing anything. If you don't know, that's a little bit of consolidation looks like. We went and we started from this high point, made this low here. We made this low, we made a higher low. We made almost a lower low. And then we went and made this high. This is higher low because it's lower than that high. We came back and made a lower high. We came back. Sorry, this is too much. Let me just redo this. I'm just going to start from this high and break it down to you all. Simple as this. Start from this high. We made this low. We made a higher low. We made this high. We made a lower, a low. We made a higher low. We made a lower low. We made a higher low. a lower high. So we made a high, a low, a lower high, a lower low, a lower high. This is actually a higher low because it's higher than these lows. We went and made basically an even high, and then we sold off again, making a lower low. But for the most part, a downward trending structure is made of lower lows and lower highs, right? As you can see, it's never always perfect, but an even low doesn't mean that, or an even high doesn't mean that a new structure was created. There might be instances of like just quick consolidation within the movement, which we've seen like here. There was kind of some even lows being made and some even highs here, but price overall was still in an uptrending structure, right? So I'm going to draw in. So I'll start from here. I'll say we made a high, right? We made a low. Low. I'll call this. All right, here we made a lower high. Boom, right here we made a lower high. Then if we go right here, we made a lower low. So right here we made, right here we made a lower low. Then you can see right here, let's clone this one. This is a lower high. This is actually a higher low, right? Because it's higher than its last low. And then you can see here, this high is this is still a lower high right here. I'll go ahead and label these just so we know. So this is actually a higher low, actually. Now I don't want this to confuse you all, but I just want to show you the realistic of it, the realism of it is that it's never truly perfect, right? And then right here, we made this is actually a lower high, right? And then finally, we made this lower low. Hold on, let me see. It looks like this. We made this lower low, right? And so overall, you can see that the downtrending structure. All right, peace. You can see right here. What's this called? You can see that. Where was I at? So basically, you can see that a downtrending. I lost my whole train of thought. You can see downtrending structure is made of lower lows and lower highs, right? So I'm gonna jot that in over here. You can see that lower lows, lower highs. Lower lows and lower highs. Simple as that. Cool. There are indicators you can actually use to help you understand pivot points, right? So if I was to open this up, this shows me the price of each pivot point, but it shows me each pivot point. They call them pivot points, or you can call them swing points, right? So this is my pivot. This indicator is actually called pivots HL. You see that? Pivots HL, right? And so it's going to mark out every major swing point. And let me explain to you actually what a swing point is, because swing points are actually really important, right? So let's do this. Definition. What defines, let's see, what defines price swing points? So a price swing point is a significant local peak or trough on a financial chart where an asset's price halts its current direction and reverses. These points are foundational for mapping market structure and timing trades. Basically what I had just told you. A swing high is a local peak formed when price reaches a high point and then declines. It is generally identified as a specific candle whose high is strictly greater than the highs of a set number of candles its immediate left and right. So it's usually higher than the candles to its left and its right, right? So if you look at the swing points, a lot of times you will see, like they got it in this picture here. So like, right, this is a swing point here. You look to its candle in its left, this is gonna be a swing low, right? Right here, in this area right here is gonna be a swing low. Look to its candle on his left and his candle on his right, they're actually higher than this candle, right? If you look over here, this is going to be a swing high, because if you look to the left and the right, the candles are actually lower, right? So that makes sense. So on a swing high, you basically, if you think about a triangle and you have this center focal point, and then on each side of that triangle, you know, there is another point. You think about the angles of a candle, and then, you know, that's basically kind of a quick visual of where you can kind of identify the swing points, right? Let me see. And then for a swing low, you just do it in reverse. So we just talked about this in the trend analysis. Trends are defined by sequences of these points, right? An uptrend consists of higher highs and higher lows. A downtrend consists of lower highs and lower lows, right? So this is super important, right? And then the next thing I'll talk about real quick, just so we can get this out the way, is we need to talk about ranging and consolidation real quick. So after we go through ranging and consolidation, we will get to talk about support and resistance. So ranging and consolidation, right? Ranging and consolidation is basically made of even highs and even lows. So basically no structure or will be created, or it will be always breaking this structure, breaking proper structure. So let's see if we can find an area of consolidation. Let's see. So it's mostly areas where you don't see much like price movement. For instance, like if I had to highlight certain areas where you just see, which is very brief, that means you've been getting a lot of price action. So these are some even highs and lows kind of in here. You kind of get a little breakout, fake out, and then price basically stays in that range. You got probably another one here where basically price is just making even highs and even lows. And then you see when price is done ranging, it breaks out to one side and then maybe goes back the other way, right? So these are little areas of consolidation. And it doesn't mean that you want to identify it so you recognize whether you want to trade it or not, you know, or what to do. Because if you can identify market structure, now you can identify potential areas of opportunity to enter a trade, right? All right, so check this out. Now we're going to talk about support and resistance. So we talked about, let me put this up here too. We've already talked about the anatomy of a candlestick. And then next we're going to go into support and resistance. And then we're going to go into time frame analysis. All right, cool. And then that will conclude our video here shortly. Let's see how fast I can kind of get through this and then explain it very well too. Okay, so all right, let's go through. We're going through support and resistance right now. Okay, let me turn off pivots because that's taking up a lot of screen. All right, so support and resistance. Support is going to be, I want you to think about it like this, right? This is how it's typically explained to people. Support is your floor. Is your floor. And then resistance is ceiling. CEI is your ceiling, right? And so that's basically how I want you to think about it, right? Support is your floor, resistance is your ceiling, right? And so I want you to think about it like this. Oh, price is about to sell off real quick, guys. Hold up. Y'all might see me take a live trade here. I might just take it on ES. It's 205. Do I want to take this trade? We're kind of basically still inside this fair value gap. And so y'all about to watch me take a live trade. Let me set up, I'm gonna just do one. Sell. I'm gonna set my stop loss. And then I don't want that much. I don't want nothing past here. 600. I think we'll make it down here. And potentially here. All right, cool. I'm gonna let that run. All right, y'all see me in the trade. Let's log out for now though, so I don't want y'all paying attention to that. Log out. All right, cool. All right, so simple as this, man. Support and resistance come down to just understanding levels, right? So I want you to see, it's basically an accumulation of like swing points, right? At even points, right? So for instance, like if we were to mark off like this area right here, you could call this a strong level of resistance. I mean, a support. And because you can see every time price touched this floor, what did price do? Shot up, right? Every time, right? Even down here, which is slightly lower level, but you can see from here, price shot up. And then you can see something like, what's a good area of resistance right now? All right, I'll just mark off this like this. You can see that every time price may have gotten to this level, it was selling off, right? You also have, support resistance levels within levels. For instance, let me turn on my kill zones, right? So you can see every time price came in here, it sold off. Came up here again, sold off, all right? Came in here again, bounced off. Yeah, it might have continued up, but the point is understanding where price is reacting from. It's just counting out those areas. You could call this a strong area of resistance, right? At this area, price got here, or even here, price was selling off. You see that? Boom. Yeah, price gapped up earlier on this part. It made a gap and continue up, but originally it got inside here, and then y'all see it just sold off. Boom. You see right here, price got inside here, sold off. Boom. Okay, so remember, resistance is your ceiling, support is your floor. From resistance, you probably want to look to sell. From support, you probably want to look to buy. Boom, support and resistance. All right. All right. Next thing, higher time frame analysis. So let's gonna do it like this. Let's do it like this. So in the time frame analysis, you have higher time frames, which take priority. And then you have lower time frames, good for execution, good for sniper execution. Boom, good for sniper entries. So you will see a lot of times swing traders will use a higher time frame a lot of times, or people who trade from a higher time frame, they hold their trades a lot longer. And then you'll see people who scalp and maybe do intraday trading might trade from the lower time frames. Higher time frames I would consider would be like, for instance, let's go out to a monthly chart. A monthly chart is absolutely going to be a higher time frame, right? And so we can see each one of these candlesticks is now, which is important, right? Each one of these candlesticks is now going to represent a whole month of price movement. So we can see June, we've pulled back a little bit and getting a reaction. You know, May we were up, April we were up, March we had a pullback and then it rejected, and then you can see February barely any movement, kind of just consolidating. In January and February, not too much movement. Even in December we got pullbacks and rejections. We ran from May last year on up into all the way to October, right? And so you can see, if you would have held price from March 2020 all the way up until today, you'd be up something. You would have doubled your money. You would have doubled your money by now. And then you got monthly time frame. I would say that's a higher time frame. You got the weekly, which is also a higher time frame. So this is the move from week to week. And so that means that how many weeks are in a month? Right? You got 4 weeks within a month, usually a little more, right? And that's going to be reflective of smaller price movements within a larger candle, right? Same with the daily. You have 7 days out of a week, or in our case, about 5 days out of a trading week, right? And you can see that this is going to be even more reflective of smaller price movements, or more precise price movement within a larger candlestick, right? For instance, like, I'm just going to mark off this low right here. I'm just going to mark off this low. And this is going to be important because now when we start talking about entry models, and your strategy, it's good to know structure, but you want to pair that with overall price movement. The reason why you want to pair the overall price movement is because you want to go with the direction that price is moving. You don't want to go against price. You want to go with price, right? And then going into the lower time frames allows you to find the smaller pullbacks for good entries. That makes sense? And so, because in the case of a downtrend, right? If the price is downtrending, right? It's like, what's the best place to get in? And really, this is a strategy in itself. if you know price structure, support and resistance, and understand higher time frame versus lower time frame, you know, prioritization and movement, then you basically can trade simply using that, right? For instance, like right here. So I just asked you, what is the best place to get in if price is downtrending? Remember this, if you don't know already, the best place to get in on a trade that's already in the trend is in the pullback. So to get in on pullback, you have to be able to understand price's direction. To understand price's direction, you need to be able to understand price structure, right? So if I just made this, you see we're making higher highs, higher lows, higher highs, higher lows, right? So you made a high, we made a lower low, we made a lower high, we made a lower low, lower high, lower low, lower high, lower low, right? And so where are the pullbacks? And I'll mark out the pullbacks for you if you don't know already. The pullbacks are going to be in these areas, right? Those are the places you want to get in. These are the places you want to be in that trade. So you want to be in these areas, you want to be off in this area, looking to go down. Right, take it down. You want to get off in there, somewhere in there, and then look to take that down. Right? So in an uptrend, where's the best place to get in the trade? You're seeing higher highs and higher lows being made, right? I'm gonna do something crazy like that to y'all. You know what I'm saying? Where's the best place to get in on the trade? Now, the pullback. You want to get in on the pullback, right? So maybe you want to get in here. You want to get in here. Now there's a little more to it, right? Because you want to see price show you confluences and indications of the continuation of a trend, but generally speaking, you want to just get in on the pullback. So like if you hear people saying in the stock market stuff like buy when everyone is fearful. This is one of Warren Buffett's famous quotes. Buy when everyone is fearful and get out when everyone is optimistic. Because the psychology of retail traders is they're typically late to the party. And so if all the retail traders are getting in, that means because that prices already ran and you're probably a little late and it's time to get out, right? And so that means that this is what that looks like practically. On red days in the market, when the market is fucking bloody, sorry for the curse words, when the market is bloody, when everything is selling off and everyone is scared, this is the time to look to buy. You'll hear indications of big investors buying great companies and assets at a discount. The richest people the richest and the best investors get assets at very discounted prices when the markets are going through turmoil. And this is how they make all their money. This is how they exponentially increase their wealth, by getting in on pullbacks. Now this takes patience. The market has just ran since like March. It's been running since March. We was on a crazy uptrend. We were just down as much as down to 22,800 points roughly in the Nasdaq. And then now we're up 10,000 points from there almost, right? We had made it up to 31,100 or 31,000 almost flat. And if you would have bought at that area down there on that increase, which if from 22,000 to there, that's almost a 50% increase on price. You know what I'm saying? And I think we were even down below that earlier this year when price dipped to like 18,000. So you could have made some crazy returns if you were aware of this opportunity. You know what I'm saying? It's like this is similar to the situation where it's like, when's the best time to plant a tree? Well, the best time to plant a tree was 20 years ago, you know, because then today it'll be producing fruits and many more seeds, right? But when's the next best time? Today, right now. So it's like, yo, get on it. I think that's pretty much it, man. I think y'all get it. And you can just continue going on with the entire time frame analysis. You can, like, I would say, let's say, for instance, from here, I would say, you know, you got your monthly, weekly, daily, 4H, and I would even say 1H. Those are your higher time frames, in my opinion. Now, your lower time frames would be like, you know, 30-minute, 15-minute, 5-minute, 2-minute, 1-minute. Yeah, those would be, I would say those are lower time frames. I really like to execute from the 5 and like the 15. Sometimes I'll execute from higher time frames, but for the most part, that's where I like to execute from. I think those are your, even the 30-minute and 15, I like to call those more intermediate. I wouldn't call those higher time frames, lower time frames. I would call those more intermediate, if I'm being honest. And then your 5, 2, and your 1 are absolutely lower time frames. And you want to pair those with higher time frame movement, because those are really going to get you your sniper entries. And price moves a lot faster down there. So something you need to be aware of. Okay, that concludes this video. It's been about 42 minutes, and that will drop on me explaining you know, the 3 ways the market moves, and understanding first of all, we went through anatomy of the candle. We went through 3 ways the market moves and what market structure is and what it looks like. We went through support and resistance, understanding what that is, which, remember, support is your floor, resistance is your ceiling. We went through time frame analysis, understanding the higher time frame versus lower time frame. Higher time frames will usually take priority, and then your lower time frames are good for finding entries and opportunities to get in on the pullbacks. Remember, the best place to get in a trade is on the pullback after you understand the direction of structure and things like that. Structure is going to tell you where to enter the trade, where you should place your stop loss, and where you should place your take profit. All that can be determined with structure. This is without knowing some complicated strategy or some 4-step strategy. You can trade using simple structure and support and resistance with your time frame, with your time frame analysis, right? And that will conclude our it is literally 2:22 right now. That will conclude our first learning video today. Let's go in the series. You know what I'm saying? It's your boy Montego Ramon. Y'all know what's going on. RIZERZ X, we rise to the occasion. Peace.